The change in the U.S. dollar is off to a slow start this Monday morning. Holiday week with July 4th holiday coming up on, Friday, July 4th. Canada also has their National Day of Holiday this week. So we'll talk about the three major currency pairs, the euro versus U.S. dollar, dollar versus yen, sterling versus U.S. dollar from a technical perspective. So let's get started. The other thing this week that's going to take place is the U.S. jobs report. That's going to be released on Thursday, not Friday, a typical Friday because of that 4th of July holiday. So be aware of that. We'll be led into that report by the JOLTS jobs reports and also the ADP non-farm payroll change. Those will be released on Tuesday and Wednesday, so be aware of that. Let's take a look at the euro versus U.S. dollar from a technical perspective. And if we look at the hourly chart here, the price action trading here today, as mentioned, is up and down with a little change. The euro is up about 0.5% on the day after reaching a new high for the year, trading on Friday. That new high for the year took the price above this key area off the daily chart. This swing area goes back to 2021, where we had different swing lows coming in through here, broke below that level and used that level as resistance through here, and here before moving to the downside. That area comes between 1.1663 and 1.1691, going back to our hourly chart. That area is right here. Outlined in the yellow, and you can see on Friday's trade our Thursday's trade, we moved above that level, and then we started to find support against it here and here and here. All these lows came near the high of that swing area off the daily chart. So the buyers are staying in control, but we're just not moving very far above this area. Nevertheless, if the price is able to stay above this area right through here and above the rising 100-hour moving average, the bias is still to the upside for the euro versus U.S. dollar, so don't deny that. That's what the technicals are saying. Let's take a look at the dollar versus yen next, and on the hourly chart, we didn't go and make new lows for the dollar versus yen on last week. In fact, the low price came into this, sort of ahead of this last swing low right through here, which was supportive of the bounce through Thursday and then Friday, but we did stay below the 100-hour moving average in trading on Friday, and again trading here today at the session highs and rotated back to the downside. The problem is that the low price continues to find support against a low from last week and a low going back to this point right here. So we need to get below the 143.64 to 74 level to increase the bearish bias. On the upside, we can watch the 61.8% retracement level. That level is right here. That's of the move up from this low right here to this high right here. 61.8% retracement did hold support here, and we tried to hold support here earlier today before breaking to the downside and using that level as resistance and moving to that downside. So this is going to be close resistance, and that level comes in at 144.36. The price can remain below that level, and we could see another pressure down against our low prices through here between 143.64 and 143.74. Finally, let's take a look at the sterling versus U.S. dollar. Again, we'll focus first on the hourly chart, and this currency pair last Thursday, went up to a new high, 137.70. If I go to the weekly chart, that went 2 pips above the 50% retracement, the long-term 50% retracement. This is a weekly chart, mind you, going back to the 2014 high down to the 2022 low. 50% retracement of that move comes in at 137.68. It's the first test of that 50% since reaching our low in 2022, and the first test found willing sellers against that level. So keep that 137.68, now 137.70 level in mind going forward. That was a high price again from last week at 137.70. 70. We need to get above both that 68 and 70 level to increase the bullish bias. On the downside, we're going to be watching that rising 100-hour moving average. That's a blue line in this chart. Has close support. As you can see in trading today, we kind of moved down toward that level, kind of falling below these lows right through here, but and we fell below those levels on Friday. So this area right through here between the 100-hour moving average and the 136.69 or 96 level is, sort of a support, not sort of, but it is a support level for the sterling versus U.S. dollar. If we're able to stay above that, don't deny the fact that the buyers are more in control. We're trading at multi-year highs. we just have that 50% retracement up here, and the high price that we saw on Friday up here near the 68 and 70 level to get through on the top side. But watching the 100-hour moving average, if we do break below that level, then we could see some disappointing selling down toward the 38.2% retracement of this move to the upside. Level comes in at 136.17. It also corresponds with this swing area right through here, which rises up to 136.33. So there you have it, a look at three of the major currency pairs to kickstart your trading day this Monday morning. It's quiet Monday morning. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.